China's central banks got their people's backs. That's what they seem to be hinting at as another payment deadline looms. That's the statement they posted on their website. Just to be clear, they did not mention Evergrande in their statement, which only consisted of one line about housing and a commitment to make its monetary policy more flexible. This should provide the market some relief after last month's fear that they could bring down the whole global market. Evergrande, one of the biggest real estate developers in the world, missed a deadline payment of $83.5 million in interest on its dollar-denominated bond last week. Another $47.5 million coupon is due this week and on another second round of bonds. The sheer size of the business and even bigger size of its debt is causing a panic among investors. If they default on their loans, that will mean a lot of lost income stream for many businesses. Many investors have wondered if the Chinese government would bail it out or use the company as an example to other Chinese companies to better manage their finances. However, the People's Bank of China said it commits to safeguard the legitimate rights of housing consumers. Teresa Kong, a portfolio manager at Matthews Asia, said that Evergrande's financial problems are highly unlikely to risk China's whole financial system. It's just a little blip of what things are happening. She pointed to two Chinese companies with similar debt burdens, Ambang and HNA, and that were successfully restructured without spreading the risk through the system. If Kong is right and Evergrande displays less of an impact in China's market, then the global market has nothing to worry about. If at all, what we should look at is how Evergrande is reflecting the shift in needs and behavior. Real estate has always been touted as one of gold's competitors as the best hedge. Some think of it even better because it could yield recurring income. Evergrande losing business proves that the real estate market is changing based on the changing culture. People don't live and work the way they used to. In many cases, the lines that used to divide the different aspects of our lives are getting blurred. It is dictating our finances and our lifestyle. In turn, there's change happening and the demand is happening, and it's going in a different direction. We're not saying real estate is not worth investing into. We're simply saying you need to re-examine your strategy if you have existing investments or planning to invest in one. People aren't going to the office anymore. People are thinking about live work differently. So yes, real estate is a hedge. It's a safer investment in many sectors. However, things are changing. There could be some volatility. A lot of people believe we're going to see a massive correction in the real estate market, so you got to be careful. Gold could be the hedge, safer, easier to move, more fluid. Obviously it has a limited supply, so look at gold if you haven't. We can help you out with that, and that's exactly why a lot of billionaires, Robert Kiyosaki, Naguib Sawari, are all using gold as a hedge right now. So give us a call if you're interested, 877-646-5347, or just go to our website at noblegoldinvestments.com.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.